And I think we're live. Welcome back, everybody, to another live stream here. Let us know if everything works with the sound, with the audio. That's always the most important thing. And I'm joined today by Jose. And Jose is the co-founder of Delphi Labs, which is one of the core entity that's building Mars Protocol. We're also going to learn a little bit about the origin story. But first off, congrats, Jose. You guys are the newest kid on the Cosmos block. First off, how was the week for you? You just launched Mainnet 2 days ago, or yesterday actually. How was that for you? Did you get any sleep? How are you?
Yes, sir. Um, yeah, I mean, launches are always stressful, but to be honest, most of the work is done by the team of contributors and stuff. So, I just get to kind of come on stuff like this and talk about it. But most of the hard work's done by the contributors themselves. So they launches are always super stressful. There's always a lot of things that can go wrong, but we're like the team's pretty experienced with them now. So, yeah, I think it went pretty well. Very happy with it. Very proud of the team.
There we go. Yeah, and we got 50 people right now watching. Guys, if you are excited about Mars, just make a tweet about this live stream. Let everybody know that this is happening, because I think there's a lot of also excitement and anticipation whenever there's a new chain that's launching, obviously. And also tomorrow is a very big day for you guys, because IBC, as it seems, is going to go live after the successful pass of Proposal 3, I think it is.
Mm-hmm.
So we probably see Osmosis liquidity with Mars, which we can talk towards the end, what also the purpose of the Mars token is and all these kind of things. But yeah, let's start maybe with a little bit of background, origin story. You just mentioned you're super proud of the team. Walk us through how Mars started, what's your involvement been, and also a little bit of the backstory with Terra, because I think you guys first launched on Terra, right?
Yeah, yeah, absolutely. So Delphi Labs, we started off doing like consulting work with a lot of DeFi protocols way back in like 2019. So we worked with like Synthetics and Aave and Compound, Axie Infinity, a bunch of others. And so we kind of learned a lot about DeFi then, and we did like token economics, mechanism design, but also started doing smart contracts and stuff. And at a certain point, we were kind of looking around for like consulting is like really fun, and we got to work with really smart people, really smart teams, learned a lot, built a lot of kind of knowledge in our views of the space. But at some point, you kind of get bored of like of first of all, your ideas don't always get taken up, and you just don't have the same like ownership, both in terms of decision making and kind of like influence and token holdings that you would on something you do yourself. So we decided we wanted to, instead of consult for other protocols, kind of help contribute to new protocols. And so started that was probably March 2021, and we got like so at the time we with the two ecosystems we were most excited about were Terra and Solana, for different reasons. But like Terra was just a decentralized stablecoin narrative. We thought that was, I still think that's like a really important thing that doesn't exist in crypto and that DeFi is kind of hobbled without. But and so we looked around and kind of Solana and Terra and saw that on Terra specifically there was a couple of core primitives missing. One of them was like a good credit protocol or money market, however you want to call it, and the other one was kind of a good AMM. There was just Terra Swap, which had a bunch of flaws with it. So we set out to kind of come together with a team of contributors and joint venturers, including We3 and Attic Labs and a few others to kind of birth these projects. And then yeah, Mars launched. I think had 300 or 400 million in TVL when obviously the Terra collapse happened, and that those were kind of stressful times, and then had to go back to the drawing board and figure out what we wanted to do like long term. What the vision for Mars was kind of long term. And it's pretty much the same, but just like the path to get there is kind of different.
Yeah, let's talk about this in a second, and also why you then chose to launch your sovereign Cosmos L1, and also the concept of Outposts, which I think is very, very interesting. Also, by the way, there's a very, very important comment. Next interview of Cryptocito needs to be done over Shisha. I 100% agree to this. So this needs to happen one day. But let's talk about first. So preparing for this interview, I rewatched your presentation that you gave at Cosmoverse in September in Medellin. and you were talking about, after the Terra collapse, you were kind of, rethinking everything. Why are we doing this? What's the purpose of crypto? What's the purpose of DeFi? And how you guys can position yourselves. And there you said also that the big challenge, the big challenge for DeFi is right now that a lot of the things, liquidity, the user experience is highly fragmented. And that's where you guys want to jump in and build like a highly interoperable DeFi protocol that taps into also other liquidity providers on other networks, as far as I understand. So can you maybe explain what exactly you mean by that, by fragmented experience?
Yeah.
And elaborate on that.
For sure. So at the time, I think we called it the decentralized FTX was like the vision, which that was pre the FTX blow up, but I think it's more true than ever, right? It's quite clear than ever the need for decentralized FTX. And what I mean by that is, and by the fragmented user experience, and there's sort of levels to this, but I think FTX captured it well, is that on DeFi, you have all these different primitives for the different like jobs to be done effectively in finance, right? Like if you want to trade spot assets, maybe you go to Uniswap or Sushi. If you want to do perps, maybe you're on GMX or Perp V3 or Gains or whatever. If you want to do lending and borrowing, you're on Aave, right? And so there's different protocols for everything, different UIs. Like also they don't interoperate on an account level, right? Like your margin's different across these. You might get liquidated on Aave despite having massive collateral on GMX. Whereas the thing with centralized exchange and why the UX is so good is because you can do everything in one place, right? On Binance or something, you have access to Launchpad. You can do margin trading. You can do perps. You can do lending and borrowing. You can do staking, all in like one UI. And I think Binance is like definitely better than DeFi at it, but I personally don't love the Binance UX because all the products are still separate, right? You have like your isolated margin account, your cross margin account, your USD margin perps, your coin margin perps. They all sit in different places. You have to transfer money between them. And the real, I think, beauty of FTX and why it thrived despite coming to market into a crowded market quite late was they had this like cross margin account where basically instead of having all these different accounts, you could just have one account where all your different assets count as collateral and you can do whatever you want, right? You can ape perps, you can lend and borrow, and it just calculates an LTV for your account and liquidates you if you go below that, right? And if you want to have different exposures, you can just create different sub accounts, right? So if you want to have like an account just for perps, you can just create a sub account for that, right? And instead of having like this and it means that the UX is like one product, and it also means it's much more capital efficient, right? Because I can have all my capital sitting on one account, counting for as collateral for all my other positions, right? And that's the real, I think, vision behind what Mars is trying to build is a cross margin account for DeFi, right? Where you can have one account from which you can get leverage to do anything from trade spot, leverage yield farm, leverage staking, anything you can do in DeFi. This becomes like your sub account for DeFi and provides like that unified, not just UX layer, but risk layer, more importantly, so and capital efficiency layer, if that makes sense.
So if you say that Mars is a decentralized FTX or a decentralized Binance, where do you then? What's your centralized exchange thesis? Like, where do you see centralized exchanges, having their use case, their product market fit in the future? And by the way, also I really liked what you said at your customers presentation, which is that also decentralized exchanges are kind of limited in what they can offer in DeFi, right? For example, on Mars, you could just also do cool things, tokenizing LP positions, and you can implement NFTs, and then you can do cross-chain stuff. So do you want to, or do you think like centralized exchanges will have a future? And if so, what? Or how does that all fit together?
Yeah. I think on a long enough time horizon, you don't need centralized exchanges other than as like regulatory front ends, right? So you can have like your license, because you're going to need licenses to trade certain things. You're going to need licenses to have a fiat on and off ramp and stuff like that. And I see them as basically like fiat on and off ramps, and obviously like places for regulated counterparties that maybe can't interact with DeFi. But that's like it's going to take a very long time for DeFi to get to that level. Right. And I think centralized exchanges will be relevant for a very long time because you need DeFi to improve on liquidity. on user experience, on like asset selection, and on all those kind of vectors before centralized exchanges can go away. So for me, yeah, I see centralized exchanges as kind of a stepping stone with the end game being pure DeFi, everything like every asset, stock, commodity, bond, tokenized, trading on chain, one cross margin account from which you can ape anything, right? Like you can trade stocks, you can bet, you can trade bonds, you can do like wheat futures, and obviously you can do crypto through this one account. And one thing you said is like Mars is a decentralized FTX. It's more, I think it's more like more like Mars helps contribute to building that, because there's a lot of pieces that need to come together. For instance, you need Mars is just the leverage engine and the cross margin account, so it does the risk and the leverage, right? But you need spot trading protocol, which is like what Osmosis is providing in this case. You might need someone to build out like perps. You might need someone to build out options. You might need someone to build out like vaults. And what Mars does is it just integrates with all of these, and it like creates a UI where it integrates all of these DeFi protocols, and like patchwork comes up with what FTX has as a centralized institution, right? And that's kind of the other benefit of Mars is like exactly like you said, we can benefit from, or the protocol can benefit from all the innovation that happens in DeFi. Like anything cool that people come up with in DeFi and in these permissionless rails, Mars can just integrate it and offer it as part of this leverage account.
And after the collapse of Terra, I guess you guys were re-evaluating your stance and you know whether you should wait for everything to cool down and relaunch or launch on another network. So what were kind of the options? What were some of the things that you were looking at, and why did you eventually choose to build your L1 in Cosmos?
Yeah, for sure. So I think the main two were like liquidity. So and like the performance of the chain, and obviously like decentralization is kind of like goes hand in hand with that, where you know the whole point of this thing is decentralization. So the performance has to come without too many decentralization trade-offs. But the big one for us was like liquidity was a huge one, because money markets and leverage depends on liquidity, right? To do liquidations, you need to have enough on-chain liquidity, and also for there to be demand for leverage, there needs to be like liquidity to deploy that against. So that was a big one. And then the other one was sort of like and so that's like ecosystem, right? How much stuff is there to do on this ecosystem that you might want to use leverage for? Because yeah, you like to borrow money, you need to have something to go do with it, right? Like banks exist to fund you know, whatever it is, business plans, people buying farms, I guess aping Doge, whatever you want to do. So you need to have those options available. And then the second one was just the performance. So for DeFi to work, you do need like pretty high performance for it to be competitive with centralized exchanges, because you need to be able to liquidate positions quickly, receive Oracle updates quickly. Otherwise, you'll always be limited as to the leverage you can offer. You'll always be limited as to the execution you can offer. Traders will get hosed and arbitraged against and stuff. So the better the performance, the performance is super important for DeFi. So kind of looked at those, and obviously performance has to be traded off against like decentralization. So we kind of looked at that. We looked at Solana. At the time, we had like the downtime was an issue for us, because while a network is down, prices aren't updating, so you can come back to a bunch of like bad debt, right? Which is what happened with a few Solana protocols. And also there was just like a lot of protocols on Solana. We looked at L2s. The issue with like L2s are really promising, but they're very centralized right now. Like they run on single sequencers, most of them. Some of them don't have fraud proofs in production at all. Others don't have, none of them have permissionless fraud proofs, the optimistic rollups, and then the ZK rollups are like super far away. And so that was a problem for us. We looked at other fast L1s like Sui and Aptos, but ultimately we kind of really believed in the Cosmos thesis of specialization, like and sort of app specific chains. And the way we saw it develop, we see that app specific chains are going to make sense for a lot of applications. And then we think those app specific chains for games or for whatever else it might be, we're seeing a bunch of them come up, will be kind of like suburbs, and then you'll have these city centers, like these financial hubs, where the economies of these app chains exist. And our goal was to deploy on those financial hubs. And so Osmosis is the biggest one right now. And then I think there's like Injective, Say, obviously Luna, Neutron, that are kind of vying for that spot as well.
And I guess also the migration from a technical standpoint was probably the easiest towards Cosmos, right? Because I think you guys were previously on Terra, you were built as a kind of like smart contract infrastructure on top of Terra. And I think Terra also implemented Cosm Wasm, right?
Yeah, that was a
also
for sure.
Cosmos based in the end of the day, right?
Yeah, we'd have to. We were definitely geared up both from a technical perspective and community more to Cosmos as well. But we tried to kind of not take that into account too much in the decision, because we just wanted to make because we're going to be building this for like 10 years, you know, if all goes well. We want to be contributing to these protocols for 10 years. So, you know, there's not an issue with like learning a new language or whatever. We just wanted to make the best decision. But I think we did.
Yeah, and I think it's exciting times ahead. As I said earlier, tomorrow IBC is going live, most likely, at least as it looks like. And then also, I guess a couple days after, or is it also tomorrow, that the Outpost on Osmosis is going live? When is that?
I believe, I have to check. I think it's either tomorrow or the day after that the Red Bank Outpost goes live.
But so can you explain maybe for people that are completely new to this idea, what is an outpost? What do you mean by that? In your Cosmos presentation, you gave a great analogy with like headquarters and branches. So
yeah, that's it.
Maybe you can elaborate on that.
Yeah, an outpost is like where the action happens. So it's like the bank branch, right, or the McDonald's branch, and then the hub is kind of like the headquarters. So like McDonald's HQ, you know. So if you want to borrow and lend, you go to the specific outpost and you borrow and lend assets on that outpost. And then if you want, and then administrative functions like updating governance parameters, the safety fund, things like that will sit on the hub. So just like, you know, you wouldn't go to McDonald's headquarters and try and order a burger. It's kind of similar with Mars, where the hub is like administrative and governance, and then the outpost is like the bank branch is where the lending and borrowing activity happens. And that's like an important decision, because you could have designed Mars as like an app chain. Sorry, did you want to say something?
No, go ahead.
Oh, yeah, you could have designed Mars as like an app chain where all the assets and liquidity sit on one chain, and then people borrow from that chain, right? So instead of having like all these different outposts with fragmented liquidity between them, you have like one app chain with all the assets, and then you can just borrow from that app chain through IBC or whatever. But the problem with that is, again, like you want speed, right? On these outposts, if they're going to be DeFi hubs and compete with the likes of DYDX and GMX and stuff like that, you need to have that synchronous execution and speed. So you don't want to wait for the IBC confirmations to borrow an asset. You don't want to wait for IBC for Oracle updates. You want it all to happen synchronously, which is why the outpost and the liquidity needs to sit in the same environment as the action is, like on these chains. But at the same time, the hub doesn't want to be dependent on any one chain, right? It makes sense for the hub to be independent and to make decisions across all the different outposts and like where to expand to and stuff like that.
We also have Sir Danko in the chat. He tried to get a burger at McDonald's HQ and didn't work. I think also like a good way to explain it is like with Outpost, you basically bring the product to the user versus the user has to come to the product, right? It's like catered in front of your eyes, and you don't have to like leave your home chain, right? And I also think in the same way, Osmosis is going to deploy liquidity outposts, which I think is also really exciting across chains. So you can access, you can tap into Osmosis liquidity from Juno, for example. You don't have to leave Juno. In the same case, Osmosis users don't have to use Osmosis if they want to tap into Mars and use it. So Osmosis is already confirmed, and we're waiting for it. Is there any other chain, any other alpha that you can share? What's next?
Not right now. On the Outpost thing, the Osmosis model, this is probably maybe a bit in the weeds, but the Osmosis model is slightly different, where the Osmosis model, it makes Osmosis liquidity available on every chain, but it still happens like the liquidity sits on Osmosis, and the trade just happens through IBC, right? So if you have Juno on Juno and you want to swap, it will send your Juno to Osmosis via IBC, swap it for whatever you want, USDC or something, and send the USDC back to Juno, right? And that's fine for like kind of swaps where you don't care too much how long you wait, right? You're not doing like leverage trading, you're not doing advanced finance stuff. But for if you're doing more advanced stuff, you just don't wanna have that. And so that's why it kind of makes sense for us to have liquidity on, like with Mars, unlike Osmosis, liquidity actually sits on each outpost so that it can be accessed instantly without having to wait for IBC. And then in terms of other chains, the main requirement for Mars is like having enough liquidity, and it's not like an AMM or something where you can deploy on a new chain and it's like you just deploy the contracts front end, back end, and you're good. With Mars, every chain you deploy on adds risk, right? And if there's not enough liquidity on that chain, or liquidations can't happen on time, the protocol can accrue bad debt. So it's like a very big decision, kind of launching an outpost. And so it really needs to be somewhere where the juice is worth the squeeze. So I think there's a few places that make good candidates. I think Injective is one of them. But yeah, we'll definitely need some good thinking by the community.
Yeah. And let's talk a little bit about the kind of like the core, the heart of Mars, right? Which is, or the killer application, which is basically lending and borrowing. And I'm sure like there's going to be a lot more things around it, but that's kind of the core. And if we look at the highest TVL dApps currently in crypto, we see things like Aave that have nearly 5 billion TVL and Compound that has billions in TVL. Can you explain maybe how Mars compares to the big players out there? Is there any differences in terms of how the lending and borrowing works? How do the collateralization ratios work? Maybe you can share a little bit, like just on a high level, not too deep, but like high level how that works.
Yeah, for sure. So actually, Aave and Compound, well, Aave mainly also has outposts. They're like on Avalanche and Ethereum and Polygon and stuff, and it works similarly. Their HQs on Ethereum, but they have these outposts in these different places. So how it works is a good question. So the main difference I would say with Mars is like trying to build a cross margin account for DeFi versus just a lending and borrowing protocol, right? So with Aave or something like that, you deposit collateral in there, and then you could kind of and then you borrow, but always in an over collateralized way, right? With Mars, you can, so for instance, if I put in $100 of Ethereum, I can borrow up to like less than $100 of USDC, right? Because if I borrowed more, I obviously have no incentive to pay it back. Whereas with Mars, because you have this like smart contract lending primitive, you could put in $100 of collateral and actually borrow more than your collateral, but it's all held by a smart contract, similar to when you get 10x leverage on Binance or something, right? You can borrow, like you have $100 of Ethereum, you can borrow $500 of USDC, buy Ethereum, and now you're like levered 5x on Ethereum, right? And if it drops more than 20% or a little bit less than that to give some margin, the contract would liquidate you. So it's much more trying to create like a DEX-like experience where you can lever different things and have like a sort of centralized exchange-like trading experience versus just over collateralized like borrowing, if that makes sense.
Yeah. And then within Cosmos, we see there's Umi, right? Umi is also building a lending and borrowing platform. They also have their own L1. I'm sure there's like a couple others. People are mentioning also Nolus, which is now coming up. How do you view the competitive landscape within Cosmos? Is there like competition? Is there synergies with other lending providers, or how do you see that?
Yeah. I'm not super familiar with Nolus. In terms of Umi, I would say the main difference there is that they went for the app chain model where the liquidity all sits on their app chain. And so in order to use it, you have to, like you said, you have to go to the product, but also you can't compose synchronously with something like a DEX that like Osmosis, right? You would have to, and compose synchronously just means if you want to do something on a DEX, you have to wait for IBC, right? If I want to do leverage trading or something, I have to wait for IBC, and also the assets that I have on Osmosis don't count as collateral for on UMI, right? Whereas and so UMI will I think have to attract like dexes and stuff to launch on that chain and build out its own DeFi ecosystem. Whereas Mars is launching on Osmosis and will launch on these DeFi hubs and just provide this leverage function, which means that it can then integrate with a bunch of these DeFi protocols and create like a really cool like leverage trading, leverage staking, leverage LPing experience, if that makes sense. So yeah.
And the way that works, is that primarily thanks to IBC, or what type of kind of like interoperability or connectors do you have that enables that?
Yeah, so Mars doesn't need well, like Mars needs IBC for governance, right? And so like on the hub you have staking governance, which can update parameters of any outpost, so risk parameters, asset listing, and stuff like that. And that's the main way in which IBC is used, to basically carry instructions from the hub, from the headquarters to the outposts, like, you know, reduce your increase your borrow caps, or reduce your borrow caps, or list this asset, whatever it might be. But it doesn't actually need IBC to do any of the borrowing or lending, because it's as if it was a native app on whatever chain it's on. So everything happens natively and synchronously on that chain. So on Osmosis, it's just like everything. You don't need IBC because you're composing with stuff on Osmosis.
Makes sense, yeah. Is there also plans to bring Mars Outpost to like ecosystems outside of Cosmos?
Yeah. So Mars can go pretty much wherever, like in terms of like it's just limited by where IBC messages can be sent, but can also use other bridge protocols if needed to send messages there. I think for now, the biggest opportunity we see is in Cosmos, and also where the contributors kind of experience lies. But eventually, I think like Mars could go anywhere, and like the way the hub is designed, the idea is that we have some ideas of how to like unify the liquidity across all the different outposts, so that the hub can also kind of allocate. So for instance, if you have a lot of assets in some outpost where they're not being used, it could send them to some other outpost which has higher demand for borrowing and stuff like that. So yeah, for now I think Cosmos, but eventually could go anywhere.
Yeah, because I'm very excited. Like I have so many conversations and calls with teams that are bringing IBC outside of Cosmos. There's a project, for example, which is an Avalanche subnet that implements IBC. Then there's a project that is bringing IBC to the XRP ledger, which is basically from the core team that built Sologenic, which is a DeFi protocol or like a DEX, I think, on XRP ledger. Composable, right? Bringing IBC to Polkadot. So I think like that's very interesting. Like if you would have outposts on all these different layers or all these different ecosystems, you would also interconnect with other chains, right? Other ecosystems, other communities. I think long term, that's like a very cool thing. And then like you said earlier, like you resolve that like fragmented experience kind of problem.
Yeah, but it's tough though, because any ecosystem you go to, you have to integrate with all the primitives on that ecosystem. You have to make sure there's enough liquidity. You have to build out the UX there, and different ecosystems have different ways that they like work, right? Like even on Cosmos, you have like order book chains, which are very different from like an AMM chain, which are very different from generalized chains. And so, yeah. And in terms of the fragmented experience, it's still like the way it would work would still be like, you would have to choose what chain you're on, right? So you would choose like, let's say Avalanche, and then you could do your leverage trading and stuff on Avalanche, and then you could choose Osmosis, and you could do the stuff there. Like eventually there might be a way to connect your credit accounts on different chains and create like one meta credit account across across all the chains. So you actually have like a sub account for all of DeFi cross chain. But that's like, it's really hard. It's like very big brain stuff. And also it would have to necessarily be less risk. Like it would have to be more conservative than something on just one chain, because everything will just happen slower, right? You just have to wait for all these different chains to come to consensus and find out about what each other's consensus is. So it's naturally just going to be slower. And so there's a question of whether that's even worth it, right? Like, are people, is it needed? Yeah.
You also mentioned Neutron earlier, which is a consumer zone. Is that also something that you're in conversations with to deploy on an outpost on Neutron?
Yeah, it's just like it needs to launch and then have liquidity and see how it goes
Yeah.
before that would make sense, because yeah, it just needs enough liquidity for it to make sense. For it needs an AMM first before or a
Yeah.
DEX before Mars could launch.
Let's talk a little bit about the Mars token, and obviously none of this is any financial advice. Like, this is also pre-launch, like
Yep.
pre-price discovery at least. So be very careful tomorrow. You guys just made a tweet, a thread warning everybody that, guys, it's going to be mad. It's going to be madness tomorrow.
Yep.
Highly volatile. So, but yeah, talk about like more the functionalities of the Mars token, what it does and why it's relevant.
Yeah. So the Mars token is a governance token. It'll be staked on the hub in order and govern both the hub and all its outposts. And the main, like, with a credit protocol like this, the main function of the governance token is to assess risk, like what assets should be used as collateral, what actions should be whitelisted, what protocols should be whitelisted, what outposts should be expanded to. And the idea is that like the governance token will capture some of the fees from like 20% of the interest paid by borrowers will accrue to governance token holders, but also governance token holders will backstop the protocol in case of a shortfall event. So in case, for instance, you list an asset, like let's say UST, if Mars had listed UST at the time, and UST goes to zero and people were using it as collateral and you can't liquidate on time, there would be some bad debt on the protocol, right? Which just means that some collateral is actually worth like less than the debt on a certain user, and so there's no incentive for anyone to liquidate. And Mars holders basically make users, like, they get slashed first, and their Mars is used. So the stakers get slashed first, and their Mars is used to make the depositors whole. So that's like and that stuff isn't built out yet. It's like the function that's being built by the contributors, but ultimately that's how it will work. Like, governors are basically have skin in the game. They make the upside in case their decisions go well and collect the borrow interest, but they also are the first to be slashed in case there's a downside of bad risk management.
Is there any sort of like safety fund or something? I think I read
Yeah.
something about that, right? In the tokenomics. Yeah.
Yeah, that's it. So like layer one is the safety fund. So half of the borrow fees will actually go into the safety fund. The other half will go to stakers. And so if there's a shortfall event, layer one is the safety fund. And then if that's not enough, it goes to Mars stakers being slashed. It's similar to the Aave safety module, if people are familiar with that, which they were pioneers in that field.
What about some of the like tokenomics design of Mars? I think I think it has a max supply, right, of 1 billion.
Yeah.
And how is that being rolled out? Is there halvings, thirdings, anything like that?
Yeah, so currently there's just the first 3 months, I believe, or of kind of supply distributions planned out, and then it'll be up to the community to decide how to distribute those rewards, like that Mars, how to use it. Yeah, I have some ideas of stuff I think would be cool. Some other people I know have other ideas, so I think it'll be up for the community to discuss like how best to leverage that Mars for the benefit of the protocol.
Yeah, and by the way, usually, we always talk about airdrops in interviews. At least I have to ask it. You guys did an airdrop for Mars Classic holders
Yeah.
on the previous version. Can you just briefly, and I'll find a link, but can you briefly explain about the airdrop and how people can claim it?
Yeah, you actually don't need to claim it. It just shows up in your wallet. All you have to do is connect with your Terra station, or I believe Kepler supported too, with your original sort of Astro Classic wallet, and it will just show up in your with your original Terra Classic wallet, and it'll just show up in your wallet. The airdrop was just like 2 snapshots that matched kind of the Luna snapshots to Mars holders at like right before the DPEG and during the DPEG. and it's just basically trying to recreate that the same holder base. So no airdrops for like stakers or anything like that. It's just kind of trying to recreate the holder base of Mars before the Luna catastrophe.
Yeah, makes sense. Makes sense. I mean, I'm sad I didn't get it, but my bad. Also, I should have used it probably before. But anyways, I just dropped the Imperator actually, which is a very good validator. They made a thread about how you got your Mars airdrop, and you don't have to claim it. You just got it as you just said. But you got to connect your station wallet or your Kepler wallet, and then you can get it. And by the way, I also see some questions we can go through in a second. Everybody is listening. We got nearly 100 people. Drop more questions. We can go through that in a second. But before we do that, can you maybe share a little bit the kind of like short-term roadmap? What's next for you? Where's your focus on? What's coming in the next couple of weeks and months for you guys?
Yeah. So short term, like token goes, like token incentives and IBC goes live tomorrow. Then Red Bank will go live on Osmosis. That'll be like the first outpost. And then the rover, so the credit account functionality that we described before, will go live on Osmosis. And then I think the main sort of thing then will be improving the UX and like adding more assets as collateral. Like obviously something like ST Osmo makes a lot of sense. Adding more integrations, like adding leverage trading, leverage staking, different functionality like that, and just making it a compelling product on Osmosis. Like the ultimate goal is that, like I said before, you can have a UX that's similar to Binance or FTX, right, on chain, where you have complete control of your assets. That's going to take a while because of blockchains are the level we're at right now in terms of speed and everything is not where it needs to be. But I'm confident within 2 years, crypto will get there where we'll have those experiences. And so that's the goal, like to do that on Osmosis. And then I think Outpost makes sense to the extent that there are places where we think we can get to that experience, right? And so I'm interested, for instance, in the order book chains like Say and Injective, Injective being live, because order books are like the main way that centralized exchanges work, the main way that traditional finance works. And so there's interesting experiences you can create there. But yeah, that's kind of the end game. So I'd say that medium term, it's like create this centralized exchange like experience on Osmosis, get as close as possible to that. And then long term, become the credit protocol for the Cosmos, right? Like spread Outposts far and wide to anywhere that we think has a chance of becoming that decentralized Binance and serve leverage to all of them.
I like that, yeah, and hopefully we can reach the TVL all-time highs and yeah,
yep, that'd be nice.
350 million just before the UST collapse. So let's get back there. But yeah, I'm very optimistic also. What's Cosmos in general, Cosmos DeFi. I think we're just getting started here. There's a question about whether anybody has been able to launch the app yet, because I know on the website it says launch app, and if you click on it, it just refreshes the site basically. But I guess that will go live once the Outpost is live, right?
Yeah.
Okay. Yep. So hang in for, I don't know, 2-3 days, and it should be fine. There's another question from Galatasaray CA. Given the Mango hack that happened, have you changed any of the features in Mars from what was implemented on Terra?
No, not really. Like the Mango hack was a result of like poor risk parameterization on an asset, right? Like with Mango was given too much collateral weight for the liquidity it had. And it's like the attack you can always do. Like if you have an asset that that has like a certain market cap, but you can easily manipulate the price upwards, then you can use that asset as collateral, then manipulate the price upwards and borrow way more than you should be able to, right? And so that's where like intelligent risk modeling is super important. And the Martian Council has a bunch of like really good risk people and contributors to it that are being very careful with these decisions. It's going to start off with very low caps as well on the Red Bank. I think like just a couple $1 million of deposit caps, and the caps will be lifted slowly. The main thing with all this stuff and with credit protocols is like trust, right? Like you cannot lose users assets, and so it's really important, I think. And as I said, we want, like, I'd like Mars as a protocol to exist to 10 years from now, and to do that, you got to like build slowly, make good risk decisions, and make sure you do things carefully. So yeah, not really anything as a result of the Mango hack, but we definitely looked at it a lot. We like looked at it a lot. We're always trying to like you know, because we did this anyway as consulting, do these like red team, you know, attacks where we're trying to figure out how we would exploit these protocols and then what the mitigants would be. We actually have a video on our YouTube about the Mango hack and another one by the same Avi guy where he tried it on Aave, which is even more interesting actually. But yeah.
There's a question: when Osmo Mars pool tomorrow, if IBC goes live. But again, don't ape in. It's going to be highly volatile.
Yeah.
It's going to be thin liquidity in the beginning, so be careful. But yeah, trade at your own risk. I guess. Also questions about price discovery. No clue. I don't know. We got to see what the market does.
What do you expect? Yeah, I do not have expectations, honestly, for that.
Yeah.
It's going to be like, everything you said is true. It's going to be volatile. It's going to be very volatile. So
yeah,
be careful.
I'm gonna see to try and get a good entry, but we gotta see. I don't even know what a good entry would be, to be honest. I haven't really thought about it much, but I just like to, you know, collect coins wherever I can, especially in Cosmos. So let's see. But let's see. There was one good question. I don't know if you see any question in the chats. Let me know. Oh, here's one. What about governance? Mars is allowed a permissionless Cosmos address on Osmosis. How does Mars intend to issue updating to these outposts and collaborate with the Osmo Mars community for approval? So maybe you can just explain how governance works, basically.
Yeah, it's true. Like Osmosis is permissioned. So I actually like don't want to botch this, so I'll maybe get Larry to write up exactly how this works. But yeah, working very closely with the Osmosis team to make sure that we can do the updates that we need. But yeah, governance is handled by the hub, with messages sent to update parameters on the outposts, and then probably get Larry or someone else on the team to explain the like details of how the permissioned deployment works.
Skep said he missed half of the stream. But there's good news, because we're gonna be done in like 2-3 minutes, and you can just rewatch it. So no problem. Let's see, what else do we have? Danko, Cito, the coin collector. There we go. I think that's it. Is there any other FAQ that you get? Anything else that you want to share with the community? Where can people get started? What do you recommend for anybody that just listened? Like, how do they get started on Mars?
Yeah, good. I mean, I think the best thing to do is just to wait until the red bank is live and then deposit some assets on the red bank. Please, like, there's disclaimers and everything. Read through everything. This is like experimental tech, right? Like Cosmos is experimental tech, Mars is experimental tech. It's a money market. Be careful. Don't put in more than you can afford to lose. But definitely, I think the best way is just to go play around with it, and especially go play around with a credit account once that launches. It'll be, again, all this is going to be guardrailed for the launch. Like the community will vote when to lift these caps, but I think that's the best way to kind of interact with it, is to go and try it.
There's one last question that just came in from my man Diego. Congrats on the launch, Jose. This is a two-part question. We talked about it, but maybe you can just recap it as we wrap it up. What's the collateral to lend ratio? If it's over collateralized, how is this achieved?
The collateral factor is different for each asset. So, and it depends on the liquidity, volatility, and general like riskiness of that asset. And then if it's over collateralized, how is this achieved? So the contract will look at the value of your collateral at the time that you want to borrow, and manage the maximum amount that you're able to borrow based on that. And then if your LTV or your health factor dips under the amount specified by the contract, anyone can call a function which makes your assets available to be liquidated, right? Which means that someone can come in, pay your debt, and receive your collateral plus some bonus, which is like the liquidation fee, which also varies based on the asset and based on the riskiness of the asset, right? Because the riskier the asset, the more you need to be compensated to take that risk of buying it when it's when it might be like a liquidation cascade or whatever. So yeah, it's all kind of permissionless and doesn't have it happens kind of in an automated way. It's very similar to this part is very similar to Aave or like Compound and others that you might be aware of.
Jose, thank you so much for your time. I know it's been a crazy week for you, but yeah, everybody that wants to learn more about Mars, I'm gonna drop the link to your Telegram, to the Mars Protocol Telegram, and also let me actually get your Twitter profile. Do you want people to follow you or?
Yeah, sure. Always
Okay.
nice to get more followers.
So follow Jose. There we go. Cool. This
Thanks
was
very
good.
much.
Thank you so much, everybody, for tuning in. Thanks, Jose, and we'll keep in touch. Cheers.
Cheers.